Welcome, ladies and gentlemen, to our session, a very interesting issue, 20 years since Euro was born. So we will have a discussion with four speakers who will give us many interesting information. It was 30 years ago, 1992, since the Maastricht, when all this situation was born. It was 20 years ago since Euro was born, and this 2022, a year which has many difficulties. So let's give the floor to three governors, and of course, His Excellency, Mr. Trichet, Jean-Claude Trichet, in order to discuss with them four very interesting topics. What will happen with inflation, which still increases and sky highs? What will happen with monetary policy? What happens with euro and dollar? And if a third pillar will be right in front of us. Let's give the floor for a quick introduction to our honored speakers in order to continue with our questions. I will start with the governor of the Greek bank, Mr. Yannis Stournaras. We welcome you, sir.
Thank you. So shall I start with the euro, with the 20 years of the euro?
Yeah, since it was born.
Okay. Thank you for coming here in this very, very beautiful place, the center of the world, as it is called. The euro, I would say, with one word, I would say resilience, a surviving currency. Some friends had predicted the demise of the euro. It is still here, and it is very strong. I would separate the period in three sub-periods. I would say the first period, which is 2001, 2002, and up to 2009. Then 2009, 2015, 2016, and 2015 up to today. The first period had rather benign macroeconomic developments, but an accumulation of imbalances, current account imbalances, fiscal imbalances. These imbalances had been created either because the interest rates fell a lot due to convergence that created asset bubbles, capital movements to non-traded good sectors that created very high valuations of assets, but also in certain cases to fiscal, I would say, imbalances. And that case was the case of Greece, for example. These imbalances ended up in the crisis of 2009, of 2010, the sovereign debt crisis. From the beginning of the sovereign debt crisis as up to 2015, I would call it the period of awakening. Europe created new institutions. At that time, if I'm allowed to say, Greece became the midwife of history, because due to the Greek crisis, new European institutions have been created, like the ESM. The ECB took the historical decision to do whatever it takes. We created the ESRB. Europe managed to stay together this difficult period. The Eurozone stayed together. Greece, despite the prediction of, let's say, 70% of the analysts that would leave the euro, stayed in. From 2015, 2016 up to today, we have smoother developments. The macroeconomic developments in the beginning were benign. Of course, then we had two tail risks. We had the pandemic, we had the war in Ukraine. That creates new challenges, but also new opportunities for the Eurozone. I think for us now, the challenge is how to consolidate the Eurozone, to improve upon the architecture of EMU, to finalize the financial integration of Europe, to create a capital markets union, to create a deposit insurance scheme. These things don't need a change of the treaty, can be done. And also to develop the common policies like the ones that we developed during the pandemic.
Keep your thoughts about the challenges.
The pandemic was a catalyst.
We will have the opportunity to discuss on our next rounds. Let me give the floor to Mr. Makhlouf. He is the governor of the Irish Central Irish Bank. We welcome you, sir, here.
Thank you. I'll be quite brief because I've got more to say about the path forward than the history, because I can't beat Yannis on the history. Yannis was at the not just at the beginning of the euro, but at the beginning of the whole Maastricht exercise. So I can't beat him on history. But he used the word of Greece being the midwife of history, and that's not for the first time was Greece the midwife of history. I think that the sort of, and I very much agree with Yannis that I think if there's a characteristic of the euro over the last 20 years, it is the word resilience. But another word that's relevant to bear in mind, and which will bring us on to the future, is the title of the book by Martin Sandbu, which is Europe's Orphan. And I think the euro is still, to a large extent, Europe's orphan, and that's one of the things that I think needs to change. But I'll save myself for a bit later.
So let's our third honored speaker, the governor of the Central Bank of Cyprus, for first.
Thank you. I will also be brief because I'd like to avoid any repetition. But let me try and take a bit of a different angle in the following sense. Firstly, let me say that our thoughts go to the victims of the war. And being agnostic in terms of what the either military or political objectives of this war are, I think one outcome that we can all conclude on is that instead of weakening the European Union institutions, it actually strengthened them. We saw through the pandemic the first exogenous threats to the euro area and the European Union. It brought all the institutions closer together, and we saw fiscal and monetary joining together for the first time. And as a consequence of this unfortunate geopolitical situation, I think this again is proving that it's bringing the euro area the European Union members and the euro area institutions even closer together. And this is a very important outcome. And because of this, I think it also shows the need, as my governing council colleague said, of continuing and deepening the integration of the European institutions, of reducing the reliance to third country institutions or even to third country energy sources, of completing the monetary union. And underlying all this, of course, it's a requirement to enhance the international role of the euro. And I'll leave it at that. Thank you.
Thank you very much. So let me give the floor to His Excellency Mr. Jean-Claude Trichet, very well known here in Greece, of course, because he was the governor of ECB for 8 straight years. Mr. Trichet, we welcome you to our discussion. Of course, you will have the time for a quick introduction, but I will also like from you the answer to our first questions. Do you see the creation of a third monetary pillar that will be used as an alternative to dollar and euro? The floor is yours. We welcome you, Mr. Trichet.
Thank you. Thank you very much indeed for your invitation. I appreciate enormously to be there with the governors that are in charge. Let me say first that I agree very, very much with what they said, and I will say 2 words, if you permit, as an introduction, and then respond to your question. First word we are speaking of a long-term historic endeavor. Everything started more or less in the European coal and steel community, and the speech was delivered in year 50. So it is exactly 72 years ago that we started this historic endeavor. And the euro itself, as you say, as regards the notes, is a 20 years endeavor, but the euro itself as a concept is 23 years endeavor. So we have to judge everything on a long-term basis, if I may. Second, as all the governors said, resilience. We went through several very grave historic also crisis, financial crisis, economic crisis, and I will mention what has been already said. In the crisis, we were able to resist, to stand, to create new institutions, ESM, banking union, the fiscal compact, the macro imbalance procedure, the next generation EU when we had to cope with this drama of COVID-19. And let me also mention that when I was myself the president of the ECB, I had the privilege to welcome a lot of new countries, 5 countries in the euro area. So when I'm speaking of a historic procedure, it is very striking to see that during 8 years, my 8 years of mandate, 5 countries entered in the euro area, and even 3 countries entered after the start of the subprime crisis. We had Slovenia, we had Slovakia, we had Estonia entering in the crisis. And no country got out. And it was said very symbolically and powerfully by Yannis, Greece stayed in the euro. There was not a single country getting out in the crisis. And as I said, 3 countries got in the crisis, and 2 others after the crisis, namely Latvia and Lithuania. Now, for the dominant currency in the world, my sentiment is that the euro is already very important, obviously. The creation of the euro created immediately the second major currency of the world, and it is something which, of course, is important to mention, that as long as we are not a political federation, it would be normal, unfortunately, that the US dollar would be more important than the euro, not because the currency is not credible, it is fully credible, but because the signature of the treasuries, the US treasuries, represent a multiple of the signature of all the treasuries, the national treasuries in Europe. So I mentioned that en passant. That being said, the world is likely to change. I hope very much that we will maintain a single world and that we will have an international monetary system that will remain a system and not be divided in 2 or more. That would be a total catastrophe, in my opinion. If, as I trust it is the case, then we will have probably to incorporate the renminbi and have a system where you would have the dollar, the euro, and the renminbi as a first time, because everything is changing. I note, if you permit, and I will conclude on that in the SDR, you have 5 currencies issued by 4 advanced economies, the US, Europe, the UK, and Japan. And you have the Chinese renminbi. So we have already a symbolic, I would say, union of major currencies of the world. And after all, the SDR was created to be an anchor for the entire world. We will see what happens. But I note that en passant, and I also note that amongst the 4 currencies issued by central banks of the advanced economy, they have the same definition of price stability, namely 2%. And the Chinese like also the anchor at 2%. So the world in this perspective is a little bit more, I would say, ordered and stable than it is perceived at the moment. Of course, we are facing with drama and with war. And I will also have a thought for the victims of the war that we are observing today. It's a drama. Thank you.
Thank you, Mr. Trichet. Let's hear the three governors with the same question before continue to our discussion. Mr. Stournaras, the same question. Is a rule for a third dominant currency?
Yeah, okay. To have a dominant currency, I mean, for a currency to be dominant, it needs behind it a strong economy, a liberal economy with liberalized capital markets, with a lot of liquidity, a deep market. This is why the pound sterling in the past was a dominant currency. This is why the US dollar now is the dominant currency. Well, the US dollar has already lost about 10% in the share of foreign exchange reserves since the beginning of the euro. The euro has stayed constant at about 20%. The challenges haven't come so much from the traditional opponents of the dollar, that is the pound sterling, the yen, but it has come from, of course, from the renminbi, the Chinese currency, and other currencies like the Swiss franc, the Norwegian krona, the Singapore currency, Korean currency. So we have now a more, let's say, multipolar currency world, but the dollar remains a dominant one. Now, whether there's another currency will challenge the dollar, I would say, in all probabilities, the most likely currency is the euro. Especially if we create a deeper capital market in the European Union, if we develop a common bond, a safe bond in Europe. So if we have a deeper financial integration, yes, the euro could challenge the dollar. I don't see for the moment any other currency. Okay, many people, they say that the situation with the war now is creating instability. Yes, to a certain extent. Jean-Claude made some allegations. We might have blocks, but the dollar will remain dominant for a longer period. History, the pound sterling showed that for a long period after the UK had lost its share in world markets, pound sterling remained dominant. So I don't think that the dollar will be challenged for the moment. Digital currency, yes, could be a challenge. Not cryptocurrencies. I have to stress that cryptocurrencies are dangerous developments. As central bankers, we don't like cryptocurrencies. Stable currencies is another stable currencies. Digital currencies is another situation. We create central bank digital currencies that can help transactions. But even that, I don't think that for the moment something else will challenge the dollar for the moment.
Thank you, Mr. Stournaras.
Well, firstly, if I can just say, I resist the temptation to add the word currency to crypto, because cryptocurrencies are not currencies. It's just crypto. But anyway, I think the dollar is going to continue to be dominant. I think the tragedy in Ukraine, and it is mainly primarily a humanitarian crisis before it's an economic crisis. I think that's a distraction in terms of the dollar's strength. On the other hand, I think, as Jean-Claude said, the euro is already I think your word was a pillar. I think depending on your time scale, I think it seems to me, all things equal, which is a very big thing to say, I think the renminbi will probably, in the next 50 years, perhaps, maybe it might take a bit longer, become another pillar. Because if you think about the size of the Chinese economy, that if it develops the way it could develop, and it's 1.4 billion people, which is more than the US and the Euro area, the EU combined, you can see that currency becoming another pillar, but it would need to become convertible. It would need to develop all the things that you see in the US dollar. So I think that a third pillar may arrive, but I expect it to take a few generations before that actually happens.
Let's conclude with this question with Mr. Herodotou.
Thank you. I think given the sanctions as well as the position certain countries are taking vis-a-vis this invasion and war, we are witnessing individuals, corporations, etc., to move towards the renminbi, crypto, and stablecoins. And let me here just also share the view of Gabriel and Yannis that we're all against crypto. It's not a currency, it's full of risks. I would even say it's not a speculative asset because there is no underlying asset, but let's not get into that discussion. So as we see the move towards these types of currencies, excluding the crypto, we may witness an increase in international reserves in renminbi, etc. I wouldn't see, though, that dynamic, and there is research backing that an increase in international reserves doesn't mean that they will become an international currency, because you need different characteristics for such thing to happen. Firstly, we will need international payments to shift to these types of currencies, and then debt issuance patterns to also shift into those types of currencies. So I do share the view that, yes, the renminbi is the third contender, but as my colleague said, that will take a while because if we look at the Chinese economy, in addition to its internal vulnerabilities, it's not a free economy. There are controls on capital flows and a number of other issues that global investors do not want to see there when they want to place their money and their investments. So yes, it's the potential third pillar, but further down the line, not imminent. And this is why, going back to the euro, it is important, again, to use the current situation as a catalyst to complete the monetary union and the capital markets union.
Thank you very much. Let's go to the main issue, and I'm referring to inflation. Mr. Trichet, I will give the word to you. At the beginning of the year, we thought that this was, or it could be a temporary situation. It proves that it is not. So let me ask you if what will happen when inflation is concerned, and is it the right time to increase rates in order to deal with this very difficult situation?
Well, it's a delicate question. Those who decide or not to change the interest rates or to move anything in the monetary policy are there. These are the governors, and they are the decision persons together with the rest of the governing council. I have full confidence, I have to say, in the collegial wisdom of the governing council. It seems to me that it proved in the past, it proved presently that it is a very, very important, reliable way of organizing the decision-making process and taking into account all many dimensions of such a complex situation where you have around the table so many countries. That being said, it seems to me that the most important thing is to be constantly credible for the ECB Governing Council and the ECB, constantly credible, and therefore be able to solidly anchor inflation expectations, medium term, of course, not to be able to fight immediately against the price of commodities, oil, gas, and the rest of it, but to have such a credibility that the anchoring of inflation expectations would be correctly ensured. And from that standpoint, we have the example of the United States of America, which is not very encouraging, because as you might remember, the central bank during a long period of time said, no, inflation is not a problem, it's a pure transitory phenomenon. And unfortunately, it was not the case. It was a much more durable phenomenon. And then they had to say, we made a mistake. We correct what we said. It's not. And then they had to embark into an acceleration of interest rates. And we will see where we go. But when I look at the inflation action, I'm not optimistic, because to me that on the other side of the Atlantic, there has been some loss of soliding of inflation expectations medium term. So my sentiment is that the ECB does what it can to be credible, to solidly anchor inflationary expectations, which are, at the moment I'm speaking, lower in Europe, fortunately. In the US, it is a little bit, it seems to me, in the last reading of figures, a little bit over and above 2% on a 4 or 5 years basis. We will see there are different methodology and so forth.
Mr. Trichet,
But in the US, much higher. Twice as Europe. So again, in both universes, seems to me your the expectation.
we are facing some problems with our connection. Let's give the floor back to Mr. Stournaras. I think all three of you are on a silent period, if I'm not mistaken. So you are not going to tell us what will happen in the next few weeks, but the question remains, and it is very interesting.
Because we are in a silent period, please, whatever we say, it stays within this.
Nobody will say a word.
Okay. No, we are in a silence period, which is very serious constraint. So whatever I'm going to say, it will come with my academic property rather than. And of course, I could not say what is going to happen or what we're going to say in the Governing Council. What I have to say is that before the pandemic, to remind the audience, we had a big problem in achieving our inflation target. Inflation was very low, and we could not raise it. So we embarked upon non-conventional monetary policy with QE. We started buying securities. The pandemic created a number of supply-side shocks with value chains, etc., an energy shock, and on top of this now, we have another shock which could not be predicted. It's the war in Ukraine. So it's a series of supply-side shocks, okay? There were tail risks. The pandemic could not be foreseen. The war could not be foreseen. This terrible event, I really feel sorry that I call it a supply-side shock because people are losing lives, but in the economy, we have our jargon. So it is a supply-side shock. It could be, which is creating a very high inflation, spot inflation. We could kill it if we wanted in a month time, but if we do it this way, then we're going to kill the economy too. I'm saying so in order to give you the trade-off we are facing. Definitely, we will not let inflation expectations get out of hand. We will not let inflation to pass on the labor markets and in wage developments. So we'll do whatever it takes, and I will stop here because we are in a silence period. We'll do whatever it takes not to let inflation, a temporary inflation, becoming a structural and permanent one.
You recently said that you can't kill a fly with a bazooka.
Exactly. Well, yes, yes.
The floor is yours.
You probably can kill a fly with a bazooka, but you'll create...
Without destroying the room.
You would create a much bigger mess. I mean, let me build on what Yannis has just said, because I think, firstly, just to be very clear, and hopefully this will be obvious to everyone, but it's worth just saying, we are focused on price stability, right? There is absolutely no doubt at all that the Governing Council wants to and is going to deliver its mandate, which is to get inflation to 2% over the medium term. Secondly, we are experiencing now, as Yannis explained, a series of supply-side shocks, the response to which would not normally be monetary policy. So in normal circumstances, we would be looking through the, what we're actually seeing. The big question for us now is to look at the evidence and look at the data and try and understand exactly what is happening and the extent to which the inflation we're seeing is creating spillovers, which will mean that we need to take some sort of action. But the picture's not clear-cut, notwithstanding that inflation is at a level that's very concerning, and it's impacting especially families on, on lower incomes, older households, rural households are being affected. But whether or not we need to take action and when we might need to take action, I think that's incredibly uncertain. There has never been, if I can just say this, there has never been, certainly in modern history, a period of economic close down, which we saw during the pandemic, followed by the lifting of all the restrictions all of a sudden, followed by a war. So these circumstances are pretty unique. So they pose interesting challenges to the three of us and the rest of our colleagues. The last thing I'll say, which is just worth saying because I read a lot in the newspapers, that people see what the Fed is doing and therefore say the ECB needs to do the same thing. That's a mistaken conclusion. Certainly, the Fed and the dollar and the decisions they make have an influence on the whole world. But the US economy right now is in a different situation to the Eurozone economy. And I think that's very important. It was actually in a different place at the beginning of the pandemic. The fiscal impulse that we saw during the pandemic in the United States was much stronger than in the EU. And the energy price shocks that we are experiencing in Europe are different to the US. If you talk to Americans, they'll tell you it's terrible what's happening to their gasoline prices. But they haven't lived in Europe, is my short answer to that. So the situation in the US is different. And there, the economy is running hot. And basically, that's why the Fed is taking the action it is. So it is different here. That's not to say we haven't got similar circumstances.
Mr. Herodotou, and then we will have time for a fourth round.
Okay, thank you. Firstly, it's difficult under the silent period and not repeating whatever has been said, but let's start with the premise of the question, because interest rates should not react simply because inflation is higher than 2%. In our forward guidance, there are 3 conditions that need to be met in order for the monetary policy and the interest rates to change. And one of those conditions, Gabriel already mentioned it, which is the medium-term outlook of inflation. So we need to make sure that in the medium term, it is at 2%, but also the economic underlying factors are there to sustain it at 2%. Those are in our forward guidance. So we need to make sure that all those conditions within our forward guidance that are publicly available, it's the forward guidance, it's the tool that the Governing Council uses are fully met in order to proceed with any changes. Now, as my colleagues and Mr. Trichet explained, we are having supply-side shocks. And unfortunately, those shocks have been exacerbated further by the war, because before the invasion, 50% of the increase in inflation came from energy prices. Now we are almost at 2/3 of that inflation explained by supply-side and energy shocks. And we need to make sure that we know that by changing interest rates, those supply-side issues will not be resolved. On the contrary, the squeeze that the household incomes are currently feeling and the profit squeeze that enterprises are currently feeling will be exacerbated by the increase in financing costs. And as Yannis and Gabriel said, if we see spillover effects or demand-side effects, then of course we will move. I will not expand on this further because I'm on the borderline, I think, of the silent period rules. And just to expand a bit on Gabriel, what's different in the US, as he explained, the economy there is running hot, and the labor market over there compared to the European labor market is much tighter, and wage increases are much higher. Hence, the Fed policy is quite different, justifiably so, than the ECB policy.
I have a sense that all three of you agree on this side. Let's go to our third question. Mr. Trichet, let's go back to you. The question is that 20 years ago, we created a common currency. Is it now time to go one step forward and joint issuance of debt?
First of all, I take it that we proved, as I said, that in difficult period of time, the euro area, as well as Europe as a whole, could take bold decisions. And I mentioned when I was appointed at the ECB, I was told it is totally excluded that you would have any new treaty. And everybody was thinking that. Then we had a sequence of crises, and we had 3 new treaties, namely the European Stability Mechanism, Banking Union, which was a way to exploit the previous treaty. We had also, as I said, the Fiscal Compact and the Macroeconomic Imbalance Procedure. And Europe proceeds in the long run in that way. So we have new challenges. As said our colleagues, it is absolutely clear that we never experienced such a sequence of dramatic financial crisis at a global level. And when we had the Lehman Brothers crisis, it was the worst crisis since World War II. And as was said again, we have a succession of drama. I take it that the European will face the succession of drama. Next Generation EU is a major step forward and signals part of the response to your questions. In exceptional time, we can pretty well embark on this issuance of joint bonds, if I may. And it was unthinkable before the crisis, and the last crisis, namely the COVID, and it was proved possible. So I take it that we will continue to proceed. Europe has to be permanently alert, permanently adapting to the various circumstances, and in my opinion, it's clear that Europe has to go much, much, much longer on this path. We need probably a full-fledged political union at a certain moment. I'm confident. I mentioned we started the thing 72 years ago. Let's reflect on what we will do in the next 72 years. In a world which would be so different from the present world that it would be even more obvious that without political unity, we will not exist. Greece will not exist, Germany will not exist, any of the European countries will not exist, have any influence at the level of the world. So I'm confident on the long-term historic endeavor.
Mr. Stournaras, it is a political decision, but we would like your opinion.
I will start in a different way. Let's suppose that we stop the institutional framework of the EMU and the Eurozone at this point. Will the euro survive? Will the euro die? My answer is probably the euro will survive, as we have done it up to now. It has survived. But it will not be able to compete with the dollar or, in a few years' time, with the renminbi, as my colleagues have said before. So more financial integration and more fiscal union, it's, in my view, it is not the agenda, some people are saying, but this is the agenda of the European South. No, it is the agenda to make the euro more resilient, to make the economic and monetary union a more efficient mechanism. Yes, we need to create, because we all need to have visions and dreams. Some people say, but it's not practical, it needs a change of the treaty, the Hungarians will never agree. Yeah, but we must have visions. And if we want to create an economy which can compete with the great powers, okay, then we need the United States of Europe, a more federal union for, in which definitely we need common issuance of bonds. As Jean-Claude, with his wisdom, he has observed, we already have common bonds. We have the NGEU, which in current terms, it's about 800 billion. It will be issued. Europe has already issued about 100 billion already. So we already have a common bond, okay? So in my view, it must become permanent. It should be enhanced. And this is the way forward. Of course, I understand there are political constraints. We are not politically mature, the whole of Europe, at the moment, because as you know, these things, they need a change of the treaty. A change of the treaty, it needs unanimity. It cannot be achieved now with the Europe as it is now. But definitely, we must dream, we must have a vision, and this must be the magical, as the economists will say, the steady state. This must be the steady state, yes.
Thank you, Mr. Stournaras. There is a lot of cost there, and somebody must pay for it. Excuse me. Oh, I'm sorry. Mr. Makhlouf.
Well, good things take time, and you know, if we wait another 72 years, I mean, in 2094, I'd like to think that we would have moved on. We would have learnt a lot of lessons from our experience to date. I do think, I mean, I mentioned at the beginning Martin Sandberg's book, and specifically the title, which is Europe's Orphan. And from my perspective, it's not so much about Europe becoming an economy that competes with, you know, with the dollar. For me, it's what will actually improve the well-being and the prosperity of Europe's citizens. And I'm a believer that the fragmented, by design, macroeconomic framework that we have isn't the way ultimately to improve the citizens' well-being, that you need a macroeconomic framework that actually is connected, is self-supporting, monetary policy, fiscal policy, capital markets that are integrated. The last 20 years, or 24 years, have seen, you know, we've moved a lot, and you know, just in the last 2 years, the common bonds that we now have are another big step. So I think these things need to happen. They need to happen to make the whole, and I'm not really even talking about political union. I'm talking about getting a macroeconomy that works in a connected way, not a fragmented way. You need that ultimately to improve the economic well-being of the citizens of Europe. It'll take time, but we're on that path, and we learn from the things we do wrong, and we learn from the things that we do well. And we should just keep on that path and not get distracted from it, and be prepared to take our time, which is one of the things that Europe has learned to do.
Mr. Herodotou?
Thank you. As Mr. Trichet and as Yannis already mentioned, the Next Generation EU program already constitutes a precedent in terms of joint debt issuance. Now, with that, there are a number of benefits. So firstly, having such joint debt issuance with increasing volume, it can serve as a benchmark, whether it's for bank funding costs or interest rates. It can potentially act to weaken the sovereign bank nexus. And also, as it increases, it can provide also a third benefit, which is a major step towards the creation of a euro-denominated safe asset. Having said that, there are also risks, and the main two risks, at least I can think of, are the moral hazard in terms of sovereign fiscal discipline, and then there's also a mechanical risk, which is the possibility of crowding out the ability of certain sovereign states to issue their own debt. Now, we need to analyze these risks, find relevant solutions in order to be ready and able to progress more the joint debt issuance of euro-denominated assets.
Thank you very much. We still have 6 minutes, so let's go back to Mr. Trichet for a final closure. And one last question. Stagflation, do you see any danger there for Europe?
No, at this stage, I take the risk of saying that I don't trust that stagflation is threatening Europe for 2 reasons. One is that we were growing before the war, reasonably, if I may, and the impact of the war looks like being the worst scenario which was published by the ECB. So this is still growth for this year and for next year. So growth will be weakened, it's absolutely sure, highly unfortunately. All colleagues have said that, but nevertheless, I don't think that we would be in stagnation and, of course, not in recession at this stage. Inflation, again, we are going through a hump of inflation, which is unavoidable, and it, of course, as I said, it is the responsibility of the Governing Council of the ECB to continue solidly anchor medium-term inflation expectations in order to avoid the second round effects, which are always possible in such circumstances, as we could see on the other side of the Atlantic. The wages and salary growth is 6% in the US at the moment I'm speaking. So with that growth, it is, of course, very difficult to reach the goal of 2% in the medium term. But let's not forget that the central bank is not alone. Governments, parliaments, social partners have also their responsibility to avoid the second round effects. It seems to me that it's very important also to mention that. The central bank is not the only game in town presently. And it is worth mentioning the fact that the responsibility for long-term prosperity is shared.
Mr. Trichet, we thank you very much. It was a privilege. We still have 4 minutes. Let's equally share. Mr. Stournaras, do you see a danger there?
Every supply-side shock, negative supply-side shock, it creates what we call stagflationary trends, which means prices tend to go up, growth tends to go down. Whether these winds end up in stagflation, that is, high inflation and negative GDP growth, I agree with Jean-Claude. At this moment, the probability of this happening in Europe is very small. In the United States too, despite the fact that we had an inversion of yield curves a few days ago, that some people, they say that it predicts stagnation. But I don't agree with that. Sometimes evidence from bonds market is very volatile. It changes from one day to another. It has changed already, by the way. So although there are negative effects on inflation, the inflation is going up, and on growth, it's going down, I don't think that at the moment Europe is at risk of having a recession.
Thank you very much, Mr. Stournaras. Mr. Makhlouf.
I completely agree with Yannis. I think there's always the danger that we talk ourselves into a recession. I think the evidence at the moment, anyway, is that there's going to be less growth and there's going to be more inflation, but there is going to be growth, and that's more likely than not to continue.
Mr. Herodotou.
I also agree with what has been said already. Yes, the expected growth rate is, on the one hand, less than expected because of the impact of the war, but there's still healthy GDP growth that is comparable to what the GDP growth rate was pre-pandemic, as things stand. And at the same time, the labor market is still dynamic within the Eurozone. So I share the views of the other speakers here.
Thank you very much. We came to a conclusion. Ladies and gentlemen, thank you very much. We thank all four honored guests. Thank you very much.